Hi students, my name is Roshali Demra and I have completed my CA inter examinations. I'm currently at the CA final level. So I have given my examinations and now I am like in my period after the examinations. I am a passionate teacher too. So I have an experience of around 4 years teaching mathematics, accounts, English, various subjects where like teaching opportunities are there. I am there because teaching is my passion and I always look for helping students. So that's a little introduction about myself. And I have completed my graduation from Bamu University, Aurangabad, Maharashtra. I'm currently living in Aurangabad, Maharashtra. That's about my background. And I guess that will be something which will give you a start that I am from the CA fraternity background. So I'll be able to help you in all those things. I've gone through all those stages of CA. So that will be, I'll be your teacher, guide, mentor, everything for this particular journey that we do. Okay, so we are here to today discuss about the subject accountancy, and I'll give you a brief demo and how we are going to cover. We are just going to plan how the content we are going to cover in the particular time duration of 100 hours. Okay, so let's just see what is there. First paper, 100 marks, everything, excitement and nervousness, both things are going to be there. How we are going to handle and how we are going to tackle and what time period we are going to give every particular topic will help us to score the marks. All these things we'll be discussing. Okay, give me 1 second. I'll just share my screen. Yeah. So this is our content for the particular chapter paper one. And paper one name is accounting. So we have this experience of learning accounting in our college time, 11th and 12th. You might have learned all these things, or you are learning, still in the process of learning accounting, right? So when it comes to accounting, we need to see a few things. There are multiple things. Accounting is applicable everywhere, right? So in all these aspects, how we are going to cover, how accounting procedures are applied, how we are going to keep a record of all these accounting things that are happening, all the transactions events that are occurring, all these things we'll be studying in depth for the particular subject with me in paper one accounting. Okay, so these are the 10 to 11 chapters over there which we have to cover in the duration of 100 hours. So our plan for this is like this chapter number one. Okay, I'll just write it over here for you people. This one will be taking around 8 hours. Okay, this is what we are going to take. And for this one we'll be covering all the particular topics in there. This is all basics, accounting, how it works, all the particular aspects, your principles of accounting, accounting standards, basic of accounting standards is also given over here. Okay, then comes your accounting process, which you have already learned in 11th 12th standard, which includes your recording the transactions, journalizing, ledger posting, trial balance preparation, all these procedures, preparation of financial accounts, all this is your accounting process. All these we are going to learn. So this is going to take around 10 hours because it's a big chapter, important for us, all the aspects we need to learn. So this is going to be consuming 10 hours. Then we'll be going to chapter number 3, that is bank reconciliation. Every transaction now is happening in the banks, right? So all these bank transactions, how we are recording in our books and how it reflects in the passbook, all these have to be matched. If there is any entry which has been recorded in your books of account but not passed in the bank, maybe due to some technical issue, or if it is a check, it takes time for clearance, right? We have learned about this. So that things, the reconciliation is to be done at the year end, at month end, people do it so that all the records are kept in line. That is what we are going to learn. This is going to take around 6 hours. Like these chapters, if I tell you this chapter number 3 to chapter number 7, all this will take around chapter number 3 to chapter number 6 will take minimum 6 to 5 hours or 5 to 7. Between 5 to 7 hours, all these chapters will be covered. Okay, so this will be around, like if you see chapter number 2, that is going to take 10 hours. So this one is going to take your 10 hours. Okay, and from here till chapter 6 we can consider like these 4 chapters will take around 26 hours. Okay, yeah, so that is covering our major syllabus over here. Okay, if we see that a major part of it is being covered in this particular chapters 36 and 4 8, all these 44 hours will be using for all these chapters where all your basics will be cleared, all the concepts will be cleared, and that we will be using in chapter number 7, preparation of final accounts of sole proprietor. Okay, so that's a big chapter where you'll be learning about accounting for particular industries, manufacturing industry, trading industry, all these type of industries will be learning. So that is going to be helpful. Now, what are the things we are learning in this 26 hours? Chapter 3, I told you about bank reconciliation. Then chapter 4 comes in inventories. Inventories, how the records are to be kept of the goods received, raw material received, what are the things going out, the spare parts, all these things will be learning, all basic information will be learning. How it is to be accounted for, what method we are going to use, FIFO, LIFO, if you might have heard, or else we are going to learn everything very nicely. Then comes depreciation and amortization. You might have just heard the word depreciation, percentage of depreciation given to you in class 11th and 12th solving the problems. So that is also one thing we are going to learn over here in depth. Okay. Then comes bill of exchange, promissory notes, your checks, your bill of exchange received, promissory notes received, all these negotiable instruments will be learning in bill of exchange and promissory notes. So all in all, these chapters will consume around 25 to 26 hours. I'm just taking a rough figure of 26 so that we take it to the maximum and cover the major syllabus. Then we'll be having preparation of final accounts of sole proprietors. When it comes to this chapter, we'll be taking around 10 to 12 hours. Minimum 10 to 12 hours will be needing for this chapter, because this covers various types of proprietors or sole proprietors type of trading, like trading account, manufacturing account. So types of final accounts will be learning over here. And this one will be easy, as you might have learned in your class 11, class 12 basics of preparation of final account. So this is going to be very simple for you and easy to learn, and we'll be learning all the concepts. Wherever there are things which require much of attention, we can stretch out a little bit, and that's why I told you we can take this as 10 to 12 hours. Okay. Coming to the next, financial statements of not-for-profit organizations. Not-for-profit organizations, they are working like the Section 8 companies. If you have heard this particular topic of Section 8 companies, or else we'll be covering that in the company account chapter, chapter number 11. Okay. So this account financial statements for non-for-profit organizations which are just running for helping the society, helping the people at large, that are the not-for-profit organization. So how do they prepare their financial statements? They make an income and expenditure account. They don't have their particular trading and profit and loss account. They have their income and expenditure, receipts and payment account, the surplus is there, that is used in further. So all these things are prepared over there. This is also going to take our 5 to 6 hours. So let's just take it around 6 hours. Okay. Now, coming to accounts for incomplete records. Accounts for incomplete records, single entry system. Those people who are just writing it down. You might have seen some shopkeepers or some people who are just writing it down. How much you make the payment, they are only writing that down on a piece of paper. When you make a phone pay or Google Pay payment, QR code payment, that time they just write it down. So these are only single entry. That is going to reflect in the bank account, and they have written this one book. But they have to journalize it, keep it in their cash book also. But they are not doing it. All these incomplete records, how these are to be recorded, how accounts are to be prepared from this, all these things we will be learning. Okay. So this is also going to take our 6 hours. Okay. Then coming the major chapter, partnership and LLP accounts. This is where you might have learned a little about in 11th, 12th about partnership. You might have heard about this topic. In here, we'll be covering all those details, how practically we have to solve the problems coming to partnership and LLP accounts. What are the particular points you need to remember when we are doing particular problems, like with goodwill, coming to your profit sharing ratio, gain sharing ratio, sacrifice ratio calculation. All these things we'll be learning in depth. Okay. So this contains all particular stages of constitution also, retirement, death of partner, addition of partner, deletion of partner, like retirement of the partner. All these things will be learning. So this one is going to take the maximum time of all the chapters that we are going to. Okay. So this is going to take around 20 hours. Okay. I hope we are clear till here. Like this is how our major syllabus portion is going to be covered. And we have a little insight of all the chapters I've given you, so that it doesn't feel like ma'am ne kuch to bata diya which we are not aware of. This is just giving you a little insight of every chapter. Then coming to chapter 11, which is company accounts. Company accounts, if we are going to, as we are going to learn, here we'll be learning all the types of companies, how they work, what are the financial statements are to be prepared. We'll see the formats of the financial statements, how we have to present our data, and what is difference between the normal like the partnership or the sole proprietor account format and the company's format. We'll be learning that there, how the things are presented, the secured creditors, unsecured creditors, how they are presented, then your particular long term liabilities, how in particular how they are presented. All these particular details we are going to learn in depth over here. Okay, so this is how our syllabus is, and for the company accounts we'll be requiring around 15 hours. Okay, so more or less this will be covering your 100 hours of thing, and if and when the time permits we may add or less a bit, little bit in this particular time frame only. Here I'll be also keeping in mind that when we are learning, there is some time like 5 minutes, 2 to 5 minutes of revision also for you every time. Like after chapter 1 is completed, we can take a revision, or if there is requirement, we can take it on like weekly basis or in 3 days. That's how this works, and that's how this content is there. I hope I'm clear till here. Yeah. So let's just go through the particular topic. We are going to start with the theoretical framework, and I'll give you some insight, a little brief of the chapter and how all things work. Or we'll start with the first chapter. Okay. Let me stop the annotation. Give me 1 second. Okay. Let's go to the next slide. Okay. Let's go. Now, we are going to study the first chapter. I'll just move this a bit. Yes. I hope it won't disturb us anymore now. Chapter 1, theoretical framework. Meaning first of accounting. What does it mean? Accounting is the art of recording, classifying, summarizing, analyzing, interpreting, and communicating the financial information of an entity. So many words in a sentence. Accounting is an art of recording. You might have learned this in 11, 12 standard. It's the art of recording. You need to record that particular transaction. Now, then after recording, if you're just recording, that is also bookkeeping. I told you, like the QR code you scan over there, the uncle over there in the shop or the person who's there at the shop, he'll just write it down. The amount that you have paid, this is writing down. That is just recording. But now we have to classify what product is sold, for what value is sold, and which sales type this is. That we have to identify, classify, then summarize it. Now make an ledger out of it. Which payments are there, what date of payments are there, summarize it into particular month, analyze it, how it has increased your sales, how it has increased your bank balance, and how you're going to make repayments out of it. Then interpreting and communicating this to the financial information of an entity to the users. Interpret, make a result out of this. What is your cash balance, that you have to interpret. And when you're done, when your financial statements are prepared, that time you communicate these financial statements to whom, all the users that are interested in your financial statements. That is, your bank is interested, then your investors are interested who have invested money in this. Banks are interested if you're taking loan out of them. If you're taking loan from them, then you have to give them the financial statements. All these recording, classifying, summarizing, analyzing, interpreting, and communicating that information of an entity on a piece of paper is called as accounting, or in the system is called as accounting. It is the language of business, how we can understand the business. Business is working, things are going on, but how you are going to understand that business, all these things is done through accounting. Accounting is a medium which we understand to which we use to understand the business. Okay. Coming to the things, accounting and bookkeeping. There are differences between bookkeeping and accounting. I told you, accounting is a major part. In this, it includes bookkeeping, right? So bookkeeping just involves identifying. I told you, just writing it down, measuring, recording, and classifying transactions. But in accounting, there are some additional things we do. We summarize it, we analyze, we make the interpretation. Okay, this transaction is of this person. This money is to be received from this person. This should go in debtors. This should go in creditors. All these things are to be done and communicated. These informations are communicated to interested parties. As I told you, the banks, your lenders, your creditors, or your bank people who are investors in your firm, the shareholders for a company. All these are the people interested parties. Okay. Now, basic objective of bookkeeping. Like when we become CA, we are not just going to do the bookkeeping things. Who is going to do the bookkeeping things? The people who are employed for that, who are going to just interpret the results, or the person who is working, the proprietor who is working. They're just going to maintain those records. But in accounting, what we will be checking, how the financial position has changed, what net results, what profit, loss the company is making, the business is making, and then we will be communicating this particular information to the interested people. So that is the role of accounting. In bookkeeping, you just make a systematic record of all the financial transactions, but in accounting, what you do is you make an interpretation, whether there's profit or loss, you get the analysis. Who performs this? Bookkeeping is generally performed by the junior staff. When you will be in your learning ages, when you will be doing your articleship, that time you will be having an initial stage where you will be just learning this bookkeeping task, where you will be seeing the transactions in the journal book or in the bills, and that type that things you are going to incorporate in the particular software. Suppose Tally, SAP, all these softwares will be used. Then when you become the senior staff, after some time, after 1 year of articleship, or in the duration of 6 months of articleship, that time you'll be performing work on it. You'll be making reports out of it. You'll be making profit and loss balance sheet out of it. Okay. Now, bookkeeping, financial position cannot be ascertained by bookkeeping. Just recording of transaction will not give you the financial position. Financial position can only be understood when the accounting reports are prepared. When proper accounting, analysis, interpretation, summarization, all these things are done, that time it is called as accounting. Okay. I hope I am clear till here, like accounting and bookkeeping differences. This is just basic, so it was a little bit fast for you. Okay. Coming to the next things, transactions and events. Transaction, for a transaction to happen, any particular thing. If I say I want to buy a phone, so for that to happen, I have to spend the money, and the person who wants to sell it has to give me the phone. So for this, at least two people are involved. Okay. And in addition, some outsider can also be involved. Like if I buy the phone through any website, any e-commerce website called as Flipkart, Amazon. So this person is a third party. Some outsider is also involved. For sale and purchase of transaction, there are agents who particularly provide the goods or services. That is where also third person can be involved. But at least two people are important for a transaction to happen. Okay. Now, coming to events, events are the integral things that are happening. Depreciation. Now, at the year end, we value the stock. What is the current value? If I sell this product tomorrow, what value I'll be getting? All these are the events. Internal happenings in the business are called as events. Okay, depreciation is an event that after a year is completed, you have to charge the depreciation. The value of the product is going to reduce. The value of the asset is going to reduce. Great. So I hope we are clear till here. Let's go further. Objectives of financial accounting. Now, why are we doing this? What is the purpose, or what is the objective behind doing this? Because it helps in making systematic record of business transactions. Just writing down, say, sold this thing to Ram, sold this thing to Sham. What is it going to do? Nothing. We have to make a systematic record. We have to make a thing. We have to record them in a manner that it gives us some result. What business operations you're doing, what sales you're doing. We need a result out of it. How much sale is done in the entire year. We need to know our financial position. How much cash is there? What is my value till today? What is the position of my business? How much it is earning? All these things can be learned by doing accounting. All these things can be understood by doing accounting. Also, to provide information to users, as I told you, banks will ask you for financial statements. Your investors, your shareholders, your lenders, debtors, creditors may ask you for your financial statements. For all these things, you will be requiring this financial accounting to be done properly, financial results, financial information, financial statements to be prepared properly. Okay. So I hope this first thing was very clear to you. What is accounting, how it is different from bookkeeping, transactions definition, events definition, just the basic out of it, and why it is important. What is objective of financial accounting? I hope it is very clear to you people. Okay, let's go further. Yeah, methods of accounting. Now, how we record this accounting transaction, there will be two methods. I told you, you do a UPI payment, you do a QR code scanning payment to a particular shop. That is a cash method. But I go to a store and I tell the person, sir, I want this particular product, but I won't pay you today. I'll pay you after 5 days, after 10 days. So that is a mercantile or accrual method. He will record the transaction today only. That I will pay him 5 days later. He'll put me as a debtor from whom he'll be receiving the money. From one whom we receive the money is called as debtor. That is on accrual basis, which has not yet occurred, but still we are recording it. Okay. Now, in cash transactions, transactions are recorded on actual receipt and actual payment basis. When we actually pay the amount, that time we record the transaction. When we actually get the money, like when the cash is received in our hand, we do it. We record it. When it is received in the bank, we record it. When we make the payment, when the cash goes out of my hand, I record it. That is a cash method. When my amount is debited from the account, that is time when we record it in a cash method. Then coming to the mercantile method. Transactions are recorded when expenses become due. Now, your light bill is due in this particular month. For the business, if this month is particularly December, and for November month, light bill is already due. Today is 6th of December. On 30th of November, you know the light bill will be due and it can come anytime. Now, in the November month's expenses, you will record electricity bill. Though the bill has not yet come, though the money has not been paid, what you'll do, you'll be recording it. That is on accrual basis. That is on expense has occurred. Now it is going to occur in the particular duration. That's why we are already recording it on the due basis. When we record the expenses and when the income occurs, we record it. That is called as mercantile method or accrual method. Now, suppose you have an FD and that is going to mature in the particular 2025. But when the 2025, it will mature in April 2025, okay, 30th April 2025. But on the date of balance sheet, 31st March 2025, what will happen? 2024, what will happen? On 31st March 24, this year ends. So you have to record it. You have to say that this much of interest has occurred. You have to pay tax on that particular income because this income has already occurred in this year. Now you have to record in this year only. This is not the income of 2025. This is the income of 2024, 23, 24. So you have to record on 31st March 24 that I am having the interest occurred, not credited in your bank account, but the interest has occurred of around 25,000 in my FD, in my particular financial instrument that I have bought. Okay. That is how mercantile and cash system works. Now, basic accounting equation we should be all keeping in mind. Capital plus liabilities is equal to assets. Whatever products that you buy, whatever assets that you buy in a particular business that you own in a business are out of the money that is used from the owners. Owners have paid the capital. I told you that you might have learned in partnership. A brings capital, B brings capital, C brings capital. All this is capital owners' money that we are using to buy the assets. Also, we take the liability, we take the loan from people, we take the money of creditors, like we pay them afterwards, but we take the goods from them. All this becomes our asset. Our goods is what? Closing stock. That is our asset. So this is how the system works. Capital plus liabilities is both equal to assets. Both together become your assets. Okay. Amount owed to investor owners or investors, that is your capital, and amount owed to outsiders, bank people, your investors, or those who give you investments, this is liabilities. Then what you have invested in the business, your building, your land, plant and machinery, all this is your assets that you have bought from this money, capital and liabilities money. Okay. This is how the basic equation of accounting works. Now, there are few concepts, principles, and conventions which we need to learn in accounting. Okay. Concept means any idea which has a universal application, which is applying to all the forms of business. Accounting concepts are basic assumptions that are going to apply to all the types of business. They are the basis of foundation of a particular business. Any business you want to do, accounting principles, accounting concepts, you have to follow must. They are formulated on this basis only. On the basis of accounting concepts, accounting principles are formulated. It's like this: your concepts, your principles, and then conventions. Okay. Concepts become the basis. All these things have to be compulsorily there in your business. Coming to principles, these are set of doctrines associated with theory of procedures of accounting, how you are going to record a particular transaction, how a current practice is being carried on everywhere, like in your particular books, in the books of person living in Agra, living in Uttar Pradesh, living in Maharashtra, Kerala, anywhere. All these businesses in particular region have their accounting principles. Okay, current practices that everyone is using, conventions, what are these are the procedures, general procedures emerging out of the practice of accounting principles that may be universally accepted. This can happen that you are following a particular general procedure, other people are following a different particular procedure. So this is based on the practice that they follow. This is how the working of a particular organization is done. So these are your accounting concepts, principles, and convention. Concepts, as we learned, it has a universal application. Principles, these are your set of doctrines associated with the theory of procedures of accounting. You record particular transaction. Suppose if interest is accrued, you record in a particular manner. The other person records your interest on FD is credited, and your particular FD is debited. That is how you record it. But if that has been received, they'll be debiting and crediting the bank and all accounts, and then they'll be making a combined entry. So this is a principle. Like they may be following a different method, these may be following a different method. So these particular methods have to be combined, or one page is to be there. Everyone should be on the same line, serving an explanation to current practices. What procedure you're following, what practice you're following, that is your principle. Set of doctrines are associated with your theory of procedures of accounting. Okay, whatever practice you follow for recording a transaction, you have to give an explanation, you have to give a theory behind it. Like we have learned about the theories in our schools, theory of law and everything. So all these, what are the basis of following this, are under your principles. Coming to convention, these are your general procedures emerging out of the usage of the practice. Every day you practice something, every day some different type of client comes in, some different type of work comes in, different type of accounting comes in. So whatever conventions you're following, that all things are, whatever practices you're following of accounting principle, this is known as conventions. Okay, it is that it may not compulsorily have the universal application. Everyone is not following in the entire universe, everyone is not following it. This also can happen. Okay, with the conventions I told you now, concepts, principles, convention. Concepts are the basic of the business, then principles are above it. These concepts become the basis of forming the principles, and conventions are something which we are doing in the regular day. This may differ. I'm following particular thing in Maharashtra, in Agra you may not be following that. This can happen. These are your conventions. Okay, I hope we are very clear about this. Yeah. Now, we'll be learning about few concepts of accounting which are very important for us. Separate entity concept. Business and businessman both are separate. Suppose I'm running a business, I am a fashion designer and I'm running a particular brand. Okay, so I am different, my brand is different, that particular entity is completely different. The transactions that I do for myself, so I have a car and I drive the car for my vacation, that vacation expenses can't go in my business. These are two different things. Separate entity concept. Then your dual aspect concept. Every transaction should be recorded twice. Like one should be recorded in your cash or bank book, the other one wherever the particular account is. Suppose I buy something from a store. So the store person, how he is going to record this transaction? He is going to debit the particular goods of us. He is going to debit my bank account, like his bank account with my name. Like I have given him the money. But why he has to record my name? He doesn't know my name. Every day, thousands of customers come. What he's going to do, he's going to record his bank account, he's going to debit the bank account, and he's going to credit the goods. Now goods have reduced, I have bought something from him, I have bought 100 rupees pen from him, that pen stock has reduced, he's going to credit the stock account and he's going to debit the bank account. So two effects are to be given. Double entry aspect is compulsory, double entry system is to be followed compulsorily, and the transaction should be recorded as per the double entry. Money measurement concept. Only those transactions which can be expressed in the money, non-monetary transactions are not going to be there in the accounting. We are just going to record the transactions which have money involved in it. There is a financial transaction where money goes or comes in. That only transactions we are going to accept over here, are going to record over here. Okay, only quantitative transaction, no qualitative transaction. The goodwill has been occurred, like the goodwill has been recorded when the business is sold. That time only you're working and suddenly you can't record the goodwill. There should be some change in the constitution of the business, then only you can record the goodwill also, right? Now, if the popularity becomes because of a particular advertisement, we get the profit out of it. We are just going to record the sales. We are not going to record the profit out of advertisement, profit out of the popularity, right? We are just going to record it against the advertisement. Where the money is spent, then only you can record the transaction. Then we follow the concept of conservatism. Provide for anticipated losses, never for the profits. Wherever profit you feel that this profit may come, as I told you, like the advertisement thing, I do an advertisement. I think that there will be few losses occurring. If I think that there will be losses and I have some particular analysis behind it, I will record those losses. But if I have the profits, I won't record it. Okay. Then we have the accrual concept. As I told you earlier, when the amount or the liability arises, it has just arisen or occurred, we have to record it. Even though we don't make the payment, we have to record it. Okay. Going concern concept, we will always believe that the business is going to fairly run for a long period. We can't anticipate in 1 or 2 years the business will stop, or in this is the last year of the business. We have to always follow the going concern concept. When you feel that there is a major loss in your business and this business cannot work, the competition is very high, and you are just going to wind up the business, then only is the case when you do not follow the going concern concept. Then comes the periodicity concept. Unlimited life is there of the business. Business can work for n number of time, but every year you have to record some transactions. You have to divide it into particular transaction into various parts for controlling, comparing the transactions. This year's transactions you have to put in over here in this particular year. Record these transactions here. Then in the next year you'll be recording in that particular. Assets are there. You have to divide the particular asset into useful life. Then that is how you depreciate. So this is your periodicity concept. You have to record and measure for particular period, 21 to 22, 22 to 23, 23 to 24. That is how FY or financial year wise, particular year wise, you have to record the transaction. Then comes your matching concept. If this expense has been occurred in this year, this has to match with the particular year's recorded transaction. If I do an expense of around 15,000 today, 6th of December, and that is for 1 year, now, what I'll do, I can't record 15,000 expense for this FY 23-24. I will only have to record this up to the date of 31st March, because only for this much of period, 23rd of 24th, 31st March 2024, how much the expense is there? 6th December 23 to 31st March 24. Whatever the expense is there out of 15,000, that much only I can record over here. The remaining expense will be recorded in the next year. That is the matching concept. For this year, you record only the expense that you have done for this year. This has not occurred for this year, you record it in the next year. That you can say that it is a prepaid expense. You might have heard this word in 11th, 12th, your accounts, a prepaid expense. Okay. Then comes cost concept. Or assets should be recorded at this original cost. We always record the assets at original cost, not at the fair value NRV value. Okay. Then comes your disclosure concept. All the material information, the things that are important, all these things have to be disclosed. The users of the financial statement should be having the information about your business. The important material means important information about your business. That all should be disclosed. Then comes your consistency concept. Accounting policy shall be consistently followed from year to year. If you follow FIFO method, LIFO method in inventory valuation, if you follow depreciation straight line basis method or WDV method, same concept is to be followed, same policy is to be followed every year. You can't change it. Either it is required by law or it has been enforced or it gives a better presentation. Then only in these two cases you will be following a different concept, you will be changing the concept. But in other cases, in other years, you have to consistently follow one policy, and if you're changing it, you have to mention, disclose it why you're changing it. Okay. Then comes your last concept, realization concept, related to recognition of income. Revenue is to be recognized when it is actually earned. As I told you, if you think that out of an advertisement I'll get 50,000 of profit, have you got it today? No, you have not received any money. Don't record it. When you realize the income, then only you record it. For expense, it is not there. When you think that so that was our previous slide. We learned about all the accounting concepts. Let's just move ahead and we'll be learning a few more concepts, functions of accounting. What the accounting does, what we do in the accounting, as we read in the accounting definition, we got a little insight. Let's just see what are the functions of it. Measurement, you have to measure, like I told you, this is of particular year, 6th December to 31st March. I have to measure out of 15,000 how much it pertains to 6th December to 31st March. I have to measure for this year and the remaining is going to go in the next year. Forecasting, I have to see future losses, future expenses, not the future incomes only, future losses or expenses. That only I can see. I can see that there in the next year I'll be taking the material which is going to go at a higher price. The price of my raw material, price of the goods I purchase is going to become high. So that is going to be accounting is going to help me make the budget for the next year, where I'll be making a larger expense. When I need to take a loan, I have to present my financial statements, also forecasted balance sheet, P&L, profit and loss account. That time also accounting helps us. On the basis of 1 or 2 months transactions that have occurred, I'll be forecasting for the entire year. Okay. Then for the decision making, it is important. Without this, we can't judge like the business will work or not. Profit is there, then only the business works. So this decision, how we have to work, what strategies we have to apply, all these things are important. Accounting is important for the decision making. Then comparison and evaluation, control for comparing particular transaction, evaluating what all transactions are there, applying control where the expenses are going high, what expenses can be excluded, where the wastage is being done. All these things are identified by the use of accounting, with the help of accounting. And accounting also helps us to comply with the government regulations, because the government, we know we have to comply. All the financial statements have to be prepared, submitted to the department, submitted to the government by filing the income tax returns filing. We need the financial statements for companies compliances, ROC compliances, all these things we need the financial statement. So for following the government regulations also, accounting is very important. Accounting has various subfields. There are various types of accountings: financial accounting, cost accounting, social responsibility accounting, management accounting, and environmental accounting. Financial accounting, what we are learning right now, is the financial accounting. Then we have cost accounting. As per the product, the accounting is done, where which cost center is giving us the major profit, what particular product gives us the more profit. All this comes under cost accounting, which we'll be learning in the further inter-level, etc. Okay. Then comes your social responsibility accounting. What is your social responsibility towards the nation? How you have to be a responsible citizen? The benefits you are giving to the society, because we are taking all the resources from society, water from the society. For industries, the place, land is taken from the society, but we have to also give them something. So all this, how we are giving back, that comes under your social responsibility accounting. Then we have management accounting. At various particular levels of management, what are the profits generated? That is comes under your management account. Environmental accounting, as I told you, the resources which we are using, how we are paying back the environment, how we are paying back the society, comes under your environmental accounting. All the preventive expenses or the detective expenses, how we classify all the expenses that we do, comes under your environmental accounting. This you will be learning in your CA final, CA interlevels. Okay. Then users of accounting. This concept you have heard 4 to 5 times in today's session. Accounting users, intended users, people who are going to use. Who are the users? There are some internal users and external. Internal, your management will need. If there is a sole proprietor, proprietor will need the accounting to be done, the books to be prepared so that he can refer to it. Then employees will need to know how much profit we are going to get, how much salary we are going to get, how much bonus they are going to get. If the financial statements, if the company is working nicely, that is understood from accounting, then they'll see that okay, the company is making profits, we are also going to get some part, we are going to get the rewards, we are going to get the bonus, promotions. For all these perspectives, employees are referring to accounting statements. Then shareholders, their money is invested in your business, they need to see, is the company progressing or not, how much dividend I will get, how much return I will get on my money if I sell the shares. All these things are important for the shareholders. That's why they are also users of financial statement. They will also go through all the financial statements. Then we have the external users. investors, suppliers, government, customers. Investors, as I told you, similarly like the shareholders, like they just give the money. They can only expect that they'll get the dividend when the company winds up, not today, but when the winds up. There are some people who are investors. They put the money in your business only with the perspective of earning the profit, getting the returns. They also need your financial statements. Then comes your suppliers. Suppliers will need your financial statements because they'll be seeing what is the position of this business. Is the business earning profit? Do they have enough money in their bank account, in their cash account, so that you will be repaying to them. If I buy some goods on credit, I have to see, they creditor will see that I have to receive the money from this person. This girl has to pay me the money. So is she that credible? Is the financial statements that credible? That's why suppliers also need your financial statement. Government, as explained earlier, government regulations, we have to comply. So government also needs your financial statement. Customers may need it to understand, is the business doing well? Should we be relying on this particular thing? And some people who are not your investors right now, but someday they will become the investors. Someday they will buy the shares of your company. They also want to see today that what is the position of this business? Is the product good? Is the product bad? How the company is performing? Okay. So I hope we have majorly covered all the concepts of the theoretical framework chapter, accounting of like in the paper one accounting first chapter theoretical framework, and all the concepts that I taught you are clear and in depth. When we'll be learning all these like with the point wise things, I have not taken anything point wise over here. All the explanation, I don't have notes and anything. I'm just explaining you with this, with the module. When we read it or when you read it in the depth, you will be understanding all the concepts, all the points that I told you. You will be recalling it when you read it. So I hope this presentation kind of thing, this summarized form of notes, helped you a lot to understand the particular topic. Okay. And I would say that this is how we wind up the concept of accounting theoretical framework chapter number 1 that we have studied. Okay. That's it for the class today. And I'll just stop this 1 second.